Hello and welcome to Key Movers for Monday, December the 12th. A sample of some of the things we're looking at in our videos on MarketVisionTV.com in a market that remains dominated by the euro and the European debt crisis and the now half-baked proposal of fiscal union, which saw 17 euro nations agree to concede sovereignty to avoid future deficit and debt fallout, which saw Britain and the Scandi countries unhappy and excluded. The result is that the market's moved. It has moved from a state of suspended disbelief, where it's almost refused to accept the severity of the crisis because of the stream of hopeful news events, to a state of suspended animation. A consolidation market that will remain a trader's market until the real investment flows are decided, that will largely ignore such things as ECB and RBA's rate cuts and improving economic numbers from the States. That traders market is short, as demonstrated by Friday's CFTC figures reaching the largest net euro short position in 18 months. So unless something changes, the market will probably not be able to sustain weakness, or strength as in dollar Swiss's case, as demonstrated by the somewhat bizarre but so far successful call in the short-term euro market. Indeed, with year-end approaching fast, we can see how many different types of corrective consolidation we can find. As the Ian Park short-term dollar-yen video shows, there is the triangle. And in Don Haynes' outlook on the weekly cable, there is a triangle within a triangle. And there's surprising real clarity in the erratic euro-sterling consolidation, which I'm covering this morning, and also in the rumour-driven euro-Swiss market, as demonstrated on Friday's video. But probably the most helpful is the existence of the analogies. 4 different analogies in dollar Canada, which will help us navigate it from the dollar smile theory to the dollar grimace theory, and the amazing Aussie analogy explained in last week's daily video. But of course, there's the spiral analogy in the yen crosses, and it's this which gives us confidence in our medium-term view that this traders market will end to the downside. The big picture visions on the weekend show how dramatic this could be. But this is where perspective is so important. The market may be in suspended animation, but it's short, begging a better chance to sell in the next week. It is also vulnerable, as the European credibility gap remains unfilled, reflected by the higher yielding European bond markets. When the disinvestment starts, be warned. The size of MF Global's European sovereignty exposure was roughly the same size as that CFTC's net euro short. And if and when that disinvestment starts, bear in mind, European sovereignty debt is 1,000 times bigger. So to make the most of these opportunities, join us at MarketVisionTV.com or me, Ed Matt, on Twitter. Good luck, and of course, have a great week.